While the stock market hasn't been pretty so far in 2016, it may be providing some opportunities for the long term. In today's Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman and Business Courier Editor Rob Dahlmeyer talk about why rebalancing your investments is important when the market gets rough. Rob and Mike?
Big thank you, Mike. Thank you for being here.
Good morning.
What is rebalancing?
Sure. So, actually, pretty simple concept. What we're talking about in a general sense is what we call asset allocation, or how much do you allocate of your investments to stocks, how much to bonds, so on and so forth. And so, obviously, when you're investing, having a plan is important. It provides some discipline. You're not just out there investing randomly, which can go off the rails pretty quickly. So, whatever you're trying to accomplish, be it retirement, funding education, so on and so forth, having that target mix is important. But having a target mix, whether it's, say, a balanced portfolio, 50% stocks, 50% bonds, having that target's only half the battle. The other half is making sure that your investments stay on target. So we all know the market moves over time. Just because you started at, say, 50-50 doesn't mean that a year or two from now you're still at 50-50. So periodically going in, seeing where you are, readjusting back to your original target is what we refer to as rebalancing.
So why is now a good time to do this?
Yeah, said just a moment ago, over time, the markets change and you get a little bit out of balance, so to speak. But that can happen pretty quickly,
sure,
too. And with the dramatic moves we've had in the market so far this year, what sometimes is a very gradual type situation is now a very quick and immediate situation. So, for instance, stocks down about 10% to start the year. Bonds are slightly up. So if you have a 50-50 mix, pretty quickly in 2016, one's going to be higher than the other. So no one likes to see this volatility. You don't like to see these wide swings. But rebalancing almost forces you to sell high and to buy low. You're selling what's gone up, you're buying what's gone down, you get back to balanced, and repeat over and over.
So what should the folks watching look out for?
Sure. So yeah, it's not all easy as it sounds. There are a couple things to consider. One is, make sure your target is still the right target. If it's been several years since you've reevaluated what your goal is, maybe 50-50 isn't right anymore. Maybe it's changed. So rebalancing is important, but rebalancing to the right target is more important. So keep that in mind. And then also taxes. Over time, assets tend to appreciate in value. Any appreciation, if and when you sell that investment, is going to carry some taxes. So just going out there and willy-nilly selling things to rebalance can get you in tax trouble. Just make sure you're keeping that in mind, because that's part of the equation too.
So hiding under my bed, which is what I've been doing over the last couple of weeks, probably not the best idea.
No,
okay.
No, and we're getting some lemons right now, there's no doubt, but you can make some lemonade.
All right. Thank you very, very much. Appreciate it.